Good morning, guys. Morning. Let's just make sure that the sound is working first of all. Can you confirm that you're getting the sound through and make sure that it's all good? There's no video this morning because my webcam is not working, so I'll have to excuse that for today until I get that sorted. Morning, Dwayne. Lovely. So sound is good. Okay, we had a bit of a gremlin yesterday on the sound, but I'm glad that's sorted now. Alright, let's just also try and see if I can get the server working as well, because if I do, then I'll be able to show you some future stuff today. Alright, anyway guys, how are you all doing? I hope you all had a good trading session yesterday. Absolute bonkers price action. It was kind of not such a surprise to see the market tank yesterday, but just the sheer amount that it tanked, I think, caught people off guard. I think a lot of traders, myself included, were expecting to see continuations above the previous high, but there was a lot of failure yesterday, and I'll show you that. You can probably see it a little bit better on the volume as to why it didn't manage to break above. So yeah, real interesting day, and a huge amount of volatility, which is always nice to see. Large amount of volume traded in the market. I mean, it's the beginning of the month, so first trading day of the month is normally interesting, and the direction that yesterday traded wasn't necessarily much of a surprise. It was just, yeah, I mean, I guess it's always good if you're wrong, like I was yesterday, because I was hoping it was going to go higher. It's always good to be wrong like that. So quite pleased to, I guess, not be involved. I mean, I got one long yesterday, should I say, but yeah, could have been worse. Anyway, before we go any further, trading financial markets is risky. It involves the risk of losing invested money. We're not providing financial advice. This is really, trading decisions will be at your own responsibility. Make sure you understand the risks before you enter into any trades. Now, at the moment, you should only be able to see the 60-minute chart because there's no video or no webcam this morning, because webcam's not working at the moment. That might have been one of the reasons why I was getting glitches yesterday, but you know, we'll see. Hopefully I'll get that sorted for tomorrow. So today is going to be pretty thin as far as like economic releases and such. And so the focus is probably going to be on the US, because they're starting to focus on other countries now to with regards to trade. As far as the German politics, I mean, that is still big news at the moment. We're probably going to need to look to see whether the SPD will pull support for the coalition government at the party congress, which will be next weekend. So take a look at that. But regarding the trade deal, really, I mean, that's been big news for the last couple of months or more. Possible phase 1 deal between US and China. So Trump has started targeting other countries and has said it's going to impose tariffs on things like aluminium imported from Argentina and Brazil, and steel due to devaluation of their currencies. China has substituted away from US soybeans by buying from Argentina and Brazil. So that's pretty interesting, but you know, it's just going to be tit for tat, I think, for a while. But probably more worryingly, France have also been targeted, and there's going to be roughly sort of $2.5 billion worth of tariffs on imported goods from France. So it's starting to creep over into Europe, and that's going to be things like, you know, wine, cheese, makeup, all that kind of stuff, which is some big imports over from France. So I guess we're just going to have to wait for imported cars, because that's pretty much going to be the eventual risk, is that the US will eventually put tariffs on imported cars, and of course that's going to impact on the DAX. There's quite a few cars in the 30. Alright, so overall, really, I mean, just as far as the news is concerned, you've got the tariffs and SPD to read up on, and but as far as the economic releases today, it's pretty light. Okay, so let's jump into the charts then, and just make sure that we're doing all right here. PG up 11.21. I wonder if that's the best way to call you that. I might just call you P. I'll just call it, or peak up. There we go. Let's call you that. Yeah, true disaster, you said yesterday. Yeah, well, I mean, disaster in as much that if you were looking for longs, which I was, it's a disaster that you would have missed everything. I hope it wasn't a disaster in as much that you were long and you didn't get out of the long. That would be a disaster. I did see a few messages from people that there were blow-ups yesterday, which I think that was on Twitter I might have seen. There was a guy that made a joke about how if you want a professional service for blowing up your futures account, give me a call kind of thing, as in give him a call. So that was a bit of a shame to see. It's never nice to see your colleagues losing money. So I hope that there's a recovery on that side. But yeah, it definitely caught a few people off guard. Dwayne says, made money long, missed shorts. Wow, you made money long. Wow, okay. Possibly at the bottom, I guess, at the bounce at 13,000 or just below. Because getting long anywhere else was not easy. So if you did that, then fair play to you. It's pretty impressive. But no, I didn't get long at all. Yes, I did. I tell a lie. I did get long yesterday. I made one long, and it was stopped out. It was, pretty horrific, really, just watching it go. Because as you'll see on the strategy in a moment, there were some good spots on the strategy to get short. But I tell you, my bias sometimes, I'm so stubborn. I'm probably too stubborn for my own good at times. And yeah, never mind. What are you gonna do? Anyway, so what can we learn from the 60-minute chart? Well, I mean, we've got an upsloping fork that I've had on this chart for some time now. We've got the December composite profile that we can see as well. The fork is pretty much spent. I wonder whether this actually might be a double. Let me just see whether I can get the... I don't know if the 50s are going to do much here. Warning lines might be useful. There we go. Well, that's interesting. So what I've just done here is I've extended this pitchfork by adding or extending out like a range extension, if you like, of this fork. Okay, so you've got the center line or the median line here, and the lower median line parallel here. The distance between the median line and the lower median line parallel, if you expand that out, you've got the warning lines. And just look how that's caught price. And again, is that a coincidence? You might say so, or maybe not. But I don't think it is. I think this is just basic market geometry, and it happens time and time again. But the failure really happened here, and it happened on quite high volume. And you'll see that it was a huge amount of volume, in fact, relative to the rest of the day. A lot of it was focused up here at the top, and now obviously it's starting to form. Now that is just based on, well, CFD for a start, which we can't always really take much into consideration because it's not true volume count. It's only just the count of the trades, which is just very slightly different. Similar but different. So now that we've reached the warning line here and we're catching a bounce from, I mean, there's not really that much to go on with this profile. It's very jagged. There's lots of different little bitty zones of high volume nodes within this little zone that could catch price at 62. You've got another one here at 86, another one at 121, so on and so on and so on. 195, all the way up to what would be the composite value area high at 218. Now, I think I said yesterday that it was unlikely, or maybe it was a few days ago, that it's unlikely we would get a day that spans more than 300 points, which we pretty much got yesterday. Is it likely we get another one that spans 300 points? Well, I'm not going to say never. I'm not going to say never. But I guess what I'm trying to say here is that a bounce is likely. How far it goes is uncertain. 130 is probably a good spot because that's the first real high volume node here. Where we could maybe rely on some sort of resistance before we get to... Oh, excuse me. Well, I do apologise. If that was a contagious yawn and you did it as well, then I apologise. What was I saying? So the underside of this line here, 154, could well catch price as well. So you've got a bit of a zone here that's potential target area between 128 155, something like that. Could be interesting to mark out. All right, enough spent on that. We can see that a little bit closer on the 10-minute chart here, but I don't really think there's much benefit. What I can point out to you, though, is that... Let me try and find some blank space here, because I think I can see one. might make sense. When you're trading on the markets, you'll often see this kind of setup. Something like that. You can probably ignore the bottom and the top lines, actually. Okay. Looks a little bit like the scar on Harry Potter's head, but it's basically a zigzag, and it's not to scale. It's just showing you what it is. But you've in this case, it would be a bearish move, a bearish impulse wave that's split up into two parts, with the little retracement in the middle, often around about that 50% mark. Okay, of the overall impulse wave down. Okay, maybe you could say it's two impulse waves separated by this little consolidation phase, but really it's one impulse wave with just a pause in the middle. And what you'll often find is that when you draw a little retracement tool or something, put the 50% line in the middle, you'll often find that the zigzag is in the middle. Okay, now I obviously did that just by eyeballing it, but it was pretty close, which is cool. But on the markets, you'll see it as well. And so what often happens is when you get to this stage here, on the second part of that impulse wave, you can see it form this little zigzag. And again, if we zoomed in on that area and saw price action, you'll often see price do things like this. And you can quite literally draw a little trend line. It often gets 2 or 3 touches, and you'll see this just simple upsloping low to low trend line, little mini trend line in the middle. And when it breaks that mini trend line, you can see a resumption at the second half of that impulse wave. Okay, and so that's what a zigzag's characteristics generally show. And what you can then do is at this point here where this arrow is, you can get in on that trade. And so, for example, the arrow might just be, come on, there we go, silly thing. The arrow might just be there at the moment, price action, and you've just seen a zigzag form there, so you can kind of reverse engineer it and think to yourself, okay, if this is going to turn out into be a zigzag, then I can predict that the market is going to come down to reach this zone, and that little area could gain you a few points. So in this case it's 90 points, but yeah, I mean, I'm just doing an example on a random blank bit of chart. And then you sort of got to think to yourself, all right, well, where am I going to park my stop loss? Where can I put it where it's not obvious, where volume is going to really struggle to break the market and get above, and can you get into a position that gives you a good reward to risk ratio? All right, and that's the kind of thinking. So that's a zigzag idea, which is always a good tool to use. But I just wondered there whether that was the example of it right here. Was that a little nubble there? Where we had this kind of inverted hammer candle right in the middle as well. Was that an example of a zigzag right there? So let's just quickly measure that out. Let's just get rid of you and you. I mean, hindsight. My hindsight is always 20/20. I'm sure yours is the same. I'm sure anybody's hindsight is 20/20. But it's just good to see it when it does work, because when you do speculate on these and they turn out well, it's just you build this confidence, you build this belief, you build this almost expectation in the tools that you use. And so that's around about the 50% mark, and if you can't quite see the zigzag to which I'm referring, I mean, that's the first half, that's the little pullback. It was only a small one, but that would be the second half. So if I take the candlesticks away, there you go, you can sort of see that formation in there. Make sense? Oh, that's the wrong one. So that was interesting, but not only that was the longer zigzag, but there was actually a shorter one as well, right in the middle of this first half, and you can almost see that form in here. But I think on 10-minute chart, it's not really showing enough granularity on the price action to display it properly. So I'll probably move that one forward, and maybe I'll look at that on another chart. Anyway, because I want to get onto the futures chart in a bit, so I don't want to spend too much time on this. Okay, well, this chart haunts me, because yesterday in the webinar and in the article I said, oh yeah, things are still looking bullish because, the 5's above the 8, the 8's above the 50, and then 300 point downside. I mean, I'll put my hands up and say that a daily chart's EMAs are certainly not leading indicators by any stretch of the imagination whatsoever. They're just a good little guide, I find, to just see whether the momentum is still ticking along. But yesterday that just got punched in the face. However, we'll take a look at it anyway. So we're looking at 116 for the 5, 144 for the 8. So the 5 is below the 8. And the 8 is obviously going to be above the 50, which is 876, 12, 876. So right now, I mean, really, I guess I should be saying to myself, how much more do I want to be able to convince myself that I should be going short here? And I think I'll concede to myself that, yeah, it's a very good point. This is one of the largest range days we've seen all year, probably. I can't quite tell whether it was larger than this one down here or these ones back here. It's certainly one of the largest. Huge failure to break 367, and perhaps we should have also accepted the fact that this rejection candle suggested that there is quite a lot of supply. There's a lot of stopping power up here. Wrong terminology. I think I'll just step back to supply. Huge amount of sellers were up there before. They're still there, and yeah, this one has been just a little bit more aggressive, a lot more aggressive selling yesterday. Anyway, so the daily chart is not going to provide a huge amount of information other than show us if we were to continue our downside retracement, then we do have an obvious target area to go and get into. And this would be our value area. This is where the majority of volume has traded for 2019. Price was happy doing business here. And is this WM? Okay. You might need to clarify what that is, Dota Star. Not sure what you mean by WM. Unless it's Wilco, but I might be wrong. Anyway, so the value area for the profile on the right is an obvious target zone if this was a move to the downside. Is this waste management the stock? No, it's not waste management the stock. This is the DAX. This is German DAX. German DAX 30. At the moment it's CFD. I'm going to get a move on to the FDAX Mini in just a moment. This is, if you're wondering that because you've come on Twitch, then the reason is Twitch is a little bit behind the curve as far as being able to create some categories that are relevant for this type of webinar. So the only thing I could do is stocks and investing. So I apologise if that's misled you. But no, this is for German DAX. Okay, so daily chart, not going to garner a huge amount from here, so let's just take a quick look in on the key levels here. So huge downside impulse wave, and that was the little zigzag chap I'm talking about right in there. And this doesn't matter whether you trade the DAX or not. This doesn't matter whether you want to trade the Dow or the S&P 500 or the Nasdaq or any of the other European indices or the Hong Kong, Japanese, whatever, or even if you're in stocks and shares. This kind of pattern does happen on markets that have large amounts of activity, and you will see it time and time again. And there's a little zigzag in the middle here, which formed part of that first half of the overall wave I talked about a moment ago. See the little zigzag in the middle? And if I just zoom in on that guy, excuse me if the chart's running all over the place here. Maybe not the best example, but again, you've just got that simple upsloper, and as soon as the upsloper is broken, you're into the next start, and then once that breaks, you can then look to predict where your entry might be. So for example, as soon as this one goes here, you would maybe look at considering getting into a short on that candle here because it's broken below this low. And then you would be able to look at maybe getting a stop loss above this previous high, look at volume, and then look at targeting the overall move to the downside. You want at least 1-to-1, so it's not quite the same sort of trade setup that I go for, which is 4-to-1, but it's a different kind of strategy, and always good. And another reason why this was useful is because it broke inside the value area, so you're much more likely when you break inside the value area high from being way up above it after a failed attempt to break to new highs. Once you break inside the value area high again, you're more than likely, almost certainly, like 7-8 times out of 10, you're going to reach the point of control, which is what it did. And again, this does not rely on, this is not specific to the DAX. This is the same for any market, any futures market where you can see the volume. This is very, very useful. Alright, so that's price action from yesterday, and as it continued down, I mean, there are no further levels to really measure that against. And as today, I mean, we've got the point of control down here at 990. We've already bounced off of that. We've got the pivot at 1384, and then up here you're looking at 1320, 226. Such a wide day. I guess what's interesting here is that the value area is enormous. I mean, 226 plus 60, so you're looking at 286 points just for a value area. That's nuts. So I guess I was half expecting to see more of a consolidation day today, just to digest some of those losses. So, you know, one scenario is that we just continue to remain inside the value area and just start to reduce the size of these profiles. Okay, let's jump over to the strategy real quick. I don't think I can really tell you much more from this profile. What can we learn from yesterday's market profile? Only the fact that there was a range extension to the downside. You can see the initial balance here. And there was a range extension to the downside. It tagged the previous point of control, broke below the previous day's value area, broke below the distribution range of the previous day. In fact, broke below the distribution range of almost every single day all the way back to October, give or take, and it tagged an exposed point of control. Look at that. So, you know, as we are down here, if this is not, I mean, this looks to be almost like a mini relief rally, or short covering bounce, whatever you want to call it, as to where there is going to be some more supply to knock this further down. If that does happen, then the most obvious target zone to the downside is this guy here. All right. This guy here. Nice little value area that developed at the second half of the session yesterday, so that's probably going to get a revisit at some point. So if we do see a rally, a bounce from here, that's a trajectory that you'll likely see. Or more often what you're probably going to see is that. And I appreciate what that sounds like. It could go up, it could go down. I understand that that's a little bit neutral. But, you know, we're not here to make predictions on the market. We're just here to know what to do if the market does go in the direction that we were looking for. All right, back onto the strategy, and then let's take a look at the futures. So yesterday, what do we have? We had a literal split between two biases, ignoring this first one here on the left. So the first bias was bullish, and I did take a short. I did take a long here, which was stopped out. Can't remember which one it was. I think 936 at 315. So it probably was this guy. In fact, I think it was this one. So I took a long here. It got stopped out. And then I started to think to myself, all right, well, I missed this one anyway, so I just didn't take it. This one I didn't take because I was kind of looking to see whether or not we were going to break above these highs, which it didn't. And I was almost sat there sort of looking at this thinking, maybe I should get long. And then it started breaking lower, and I thought, all right, maybe it will bounce off VWAP. And it started jumping lower, and I thought, okay, this is a bit unusual. Maybe it will bounce off the deviation low. And it cut straight through that with this candle. And I thought to myself, all right, well, maybe there's an opportunity to either get long on a bounce somewhere around here. And then that was it. For the rest of the day, it was just, see ya. And not being bearish meant that I missed all of these moves, and you know, it's not very nice to see that, but hey, your use of the strategy would likely have been different from mine, or maybe it would have been different from mine, and if so, you would have been able to find all these, which is the reason why I share the strategy with you. Use it however you like, within reason. And yeah, so there was a short here, would have easily hit target. Short there, would have easily hit target. Short here, would have easily hit target. What do I mean by that? Whenever you take a short off this strategy, put your stop loss above the previous dot, enter in on the low of the candle, look for 4 to 1. Okay, when you get in on the trade, dot above the previous candle, get in when the candle opens, and look for 4 to 1. All right, and that's pretty much it. Dot the previous candle, that's where the candle would have opened, and then look for 4 to 1. So you can just see all of these. You would have risked 1% on the trade, and bang, you would have hit 4% return on each of them. You didn't necessarily even need to take all of them. So for example, this guy you might not have taken because of the previous yellow warning candle. This one maybe you wouldn't have taken because it didn't bounce high enough back up towards VWAP. You could have talked yourself out of any trade yesterday. But if you were just playing the strategy as it is, these were the opportunities you could have got. I was even thinking to myself of taking a long yesterday down here. I'm glad I didn't really get anywhere, and it just continued off to the races. It wasn't a million miles away from its turning point, to be fair, but you can just see how impressive a rally that was. And yeah, I mean, even my trading strategy could have picked that up if you wanted to get in on it. All right, so that is the strategy. What I'm going to now go ahead and do is bring over my server. Here we go. There we go. All right, so this is the server for... well, this is my server. There's nothing more to say. But instead of using CFD prices, this is using FDAX. So it's actually using DAX futures. It's using FDAX mini. It's the December 19 contract. And so FDAX mini contracts are €5 per point to trade. All right, a real FDAX contract costs €25 a point. It's a bit rich for me. I can't really control my trading size. Well, sorry, I can't really control my 1% by trading at that level. That's just nuts. So I don't trade it. It's too big. So I trade FDAX mini instead. And this is the chart. So you can see a little bit more information on it here. And at the moment, I mean, the depth of the market is pretty thin anyway at the best of times. The DAX is not a particularly busy, wrong word. It's not a market that has a huge amount of participation, believe it or not. And you can see double digits on the majority of the tick values for the most of the market. You never really see triples that often. Whereas, for example, on the S&P 500, you've got thousands at any one particular tick level. The DAX you don't, and that's the reason why it moves quickly, because it's thin. It's a thin market. So somebody comes in and drops a couple of FDAX contracts, the market will move, because that's the equivalent of 10 FDAX minis. So at the moment, that's where the volume is trading, and that's the depth of the market right now. If we just take a real quick look in on maybe some of these numbers bars. No, this wasn't what I was going to show you. It was going to be this guy, I think. Yeah. So yesterday there was a slight clue with what happened at this rejection point. Okay, now this chart, just to settle your eyes to it, because I know there's a lot of colour, a lot of numbers, a lot of nonsense, a lot of junk that you might not be familiar with or like the look of. But this is basically the footprint, the market's footprint. And each one of these is a 4-minute candle. Okay, and within each 4-minute candle, you can see the tick value. And within the tick value, you can see the bid-ask spread. And the bid-ask spread is being shown by whether it's red or green, based on the amount of volume that was traded at that tick level, which is the thickness of the line. So it's a little profile per candle. But also, I think it's the percentage of bid-ask, basically. Let me just go and double check on that. Yeah, bid-ask volume percentage. In fact, I might go with the difference there. Dominant side percentage. There we go. So that was the dominant side's percentage. So as you can see, just on this example here, the dominant side percentage was to the downside. There were 19 on the... Interesting. It says 19 on the bid, 58 on the ask, 72 on the bid, 46 on the ask, and so on and so on. You can see. Might even, just for the sake of simplicity, just remove the confusing color at all. There we go. I might clear it up just a little bit. Each one of the areas that are rounded is the point of control of that particular candle. But what I found interesting here, bearing in mind that bid and ask are the two different prices that you've got, you're generally selling at the bid and you're generally buying at the ask. You can see here that with 15 and 31, you got 15 on the bid, 31 on the ask. So there's actually more on the ask side, but it didn't go any higher. So there's quite a lot of, I don't want to say stopping volume, I want to say absorption. Market is absorbing that aggressive buying. There are more buyers than sellers, but the market is not going higher. And so again, as you see the next candle, 4 on the bid, 22 on the ask. So again, you've got aggressive buying, but it's being absorbed. And then again on this one here, you've got 11 on the bid, 28 on the ask, but it's again just being absorbed. And then all of a sudden, you've just got release. All of that selling is just being absorbed until there are no more buyers anymore. The same level of selling happens, and then thump, down you go. And it's just basic release of tension, I guess you could say. And then momentum picks up, and then you've got a different game theory. And things just have their own way of sparking into action. Let me just go back here. Yeah, bid ask percentage, that's fine. There we go. So the colouring is based on bid ask percentage, and you can see that they're green because there was more asked than there was bid, and off it down, down it goes. So you can kind of read the activity on the individual tick levels of each bar when you have a decent data feed, and you can go and have a look at it if you want to. Bearing in mind that you could spend hours looking at this and not really draw any major conclusions, so you just got to be careful not to waste too much time. But I just found that little zone interesting as to why it rejected, and it rejected on absorption, and as soon as the buyers gave up, they were no longer aggressive anymore, they just rolled over, and you can literally see it in the numbers. Okay, so same levels as we've got really before on the chart. I mean, yesterday's volume was massive compared to previous days, as you can see. I mean, you're looking at nearly 70,000 compared to what the previous highest day was nearly, what, 46, 47,000. I don't have 1st of November on this chart, so I can't really see what it was like at the beginning of last month, but it gives you a guide at least. And so yeah, right now on FDAX Mini, the point of control's up there at 325 and the pivot is at 92. There are some differences between this and CFD for obvious reasons, but I know that a lot of you do not trade futures, so this is why I've been reluctant to share that, because for a lot of people it's not relevant. But it should be relevant. You should always have a look at this, because this is what the underlying market is for the CFD market. So you really want to get a feel for where the depth of the market is, where the price levels are that are being dominated, what the heat map's looking like. It can kind of give you some clues for where the dynamic levels of support and resistance will be, because it doesn't always work the same when you just study volume on CFD. Right guys, that is kind of what I wanted to go through today. We've run to about half an hour, which I think is enough time. If you want to see more of the future stuff, I'm happy to share that with you, and we can run through that, maybe make a feature of it in the webinar in the mornings, because I would like to get involved or get some more contribution from the FDAX and the FDAX Mini guys, as well as the CFD guys, of course. So let me know, give me some feedback. I hope that was good. If you've joined us for the first time, then thank you for spending some time with me this morning. Hope you're armed with a coffee. If you wouldn't mind dropping a follow on the channel, that would be most useful. It'd be good to keep you updated and get you along more regularly. Tomorrow I will be back for another one. It will be next Wednesday that I won't be doing a webinar, but tomorrow will be business as usual. Fingers crossed the webcam will be fixed, but we'll see. Maybe you prefer it without the webcam, but I have bought a green screen. It's on the way, so at least I'll be able to tuck myself over in the corner and not have any background irritation, whatever, this screen that's behind me, which you can't see me pointing to because I'm not there. So anyway guys, thank you again for joining. I hope you have a good trading day today. I hope there's something that was useful in there. Just remember your zigzags, go and have a look at your trading, and yeah, thanks for getting involved. Thanks Peakup, thanks Dwayne, and Dota Star if you stuck around, thanks to you too. Alright guys, have a good one.